Run it. I can't take no loss. I don't even know what it costs.
Hi, I'm Yanis, also known as the Conscious Day Trader. We are back. I've been very busy recently, so I haven't posted any videos. But today we're going to go through the weekly bias. So this is going to be super useful for you, as it is my weekly biases that I normally do. I'm going to run you through what I'm currently doing, how I'm trading. I'm also going to talk to you about a trade I'm currently in. Why did I decide to do this trade? And hopefully it will help you on your journey to become a full-time trader, which is everyone's goal. So we're going to jump straight onto the charts, and specifically we're going to jump onto the news. Most importantly, we had the Trump news about tariffs last week. The S&P 500 dropped about 10% in 2 days. That is numbers that we're used to in the 30s and not in the 2025. But here we are. The US is looking red at the moment, and that means a lot of volatility. Now, if you are trading Forex, that is kind of good news for us, because we want movement, but we kind of want predictable movement. As much as we can put the edge towards our side, we can make our profit 10, 20 pips conservative and then get out. Now, if you're in a swing trade, obviously it doesn't really matter what happens in the very, very short term, as your stocks will grow and grow, or this will be an opportunity to add to your stocks. So remember that if you're an investor, these times are actually exciting because you get things cheaper. Now, for us as swing traders or day traders, we have to be careful of any spikes news. So that's why we're going to jump straight into baby pips to identify what are the areas that we might need to be careful this week as we're going into PMI later on in the week. So let's jump straight onto the news. The website we're using is Baby Pips. We're going to jump onto the calendar, and I've added a couple of filters just because I know I am trading certain I don't want to know about the medium or low news, because that doesn't affect my trade so much, especially when I reposition. But also, I definitely want to know about the high news. I don't want to know about the CNY because I don't trade it, but I do want to look at all these pairs, and that's something that you're not used to me, as you are used to me of trading GBP as my main asset and USD. But now I am trading all assets, and we're going to talk about that and why I'm doing that, how that provides me a lot more safety in not getting caught in movements, especially when things are a bit choppy on one asset. Now, with regards to the news this week, we had the Euro news come out. This is Singaporean time, or in Bali. If you're based in Bali, this will be right on your time. If you want to go to your time, make sure you're looking at UK or New York. And we've seen that we had the balance of trade come out, and it came as 17.7 billion. Previous was 16.2 billion, and we're seeing that effect on the euro today. However, if we're looking at all the assets, we've got some news on Tuesday on the Aussie, nothing on the USD. If you remember, these are major pairs, so main news that are going to move the pair is USD data, and that comes later on Thursday, which we have FOMC minutes. That's going to be interesting to see what happens there. We've got core inflation rate with month on month and year on year inflation rates. That's going to be a big one as well. And jobless claims. So April 10th is the time where everyone has got their eye on it in terms of what the USD is how the USD is going to react. Now, if we're looking at the pound, we're looking at manufacturing production year on year and GDP and on Friday. So quite a bit of news, nothing crazy scary like the NFP, but these are definitely movers. The other thing that we definitely have to be aware of is, what is Trump doing? When is he talking? And what is he announcing about tariffs? What is he announcing about Russia and the Ukrainian peace talks? All these things have a massive impact on the Forex pairs as well. But we just need to have the news tab open and seeing if anything is going to happen, if we need to create some safety around our trade, or we need to change our risk by decreasing lot sizes or taking shorter trades with in terms of TP. Now, next, what I want to do is jump on to the COT report. So that was the news for the week. We can prepare mentally and we can know what is currently happening. Now let's talk about the COT report. As you know, if you are in the Vanguard and the Discord, which is now closed, guys, unfortunately, so please don't message me about entering the Vanguard. It is closed to the public until later notice. We'll see if there is a possibility for some of you to come in. So what is the COD report? The COD report is the commitment of traders. It's released every Friday, but it's actually reports from the Tuesday. And anyone who's trading big amounts of trades in terms of lot sizes and shares have to report to the Commodity Futures Trading Commission, otherwise known as the CFTC. We have got to know these guys with all the prop scams that have been going around, but this time we're going to be talking about the commitment of traders and the report that gets released. How I read it, how I've created my own indicators, and how I am going to get bias for this week, and why am I in a trade, and a little sneak peek, I'm actually trading the Kiwi this week, and we'll see why. So first of all, let's jump on to something that is free. You can use it, and I can show you how you can be doing what I'm doing for a free way of getting this information. First of all, let's jump on to the COD report. Now, if you go on the search and you put COD report, first thing that you're going to see is the commitment of traders. Now, you could go in the commitment of traders. I have no idea why they haven't created a new version of this. Why have they not made it easier? Why have they not renewed the way we look at this data? So if what you will see, and you can see it here from the pictures, this is how the reports come out, and they're not looking very great. You've got non-commercials there, commercials. We also know these are speculator side. This is commercials, and also retail and others non-reportables, which are going to be interesting for us to when we're looking at trades. But we have an area where it's a lot simplified, and this is called Market Bull. Market Bull, you will get a report every week. It will tell you which report it is for the latest here, 4th of the 4th, 2025. But it also tells you, hey, remember, this is Tuesday's reporting close on the 1st. So we're about 3 days late. And if you're coming into trading Monday, we know that we're pretty much 4 days behind any moves that have currently happened. However, if we look at how, if you analyze the COD report in really detail, you will be getting moves that are a lot bigger than 1 week or 2 weeks. So this can also protect us when things are going wrong. Now, how we're going to read this? First of all, how I do things is not what everyone does. For instance, you have big names like Larry Williams, who focuses on the commercials. And the reason for that is because commercials, either the big whales, are the areas where they are actually utilizing and hedging pairs in order to protect their products, or it might be that they're needing extra assets in certain forex, in certain currencies. So they're actually moving the real assets that they need. And if you follow that, it's a very good indication of following the trend. However, now this can take a long time though. That's why I'm going towards the large speculators. Large speculators, and me specifically looking at leverage funds, because the large speculators have multiple, that is broken down in multiple reports. And I am completely focused on the leverage funds, and I'll show you why. That means that people are using leverage to predict and to analyze and find where the next move is going to be. And a lot of the times they can get out of place. And these are the areas that we want to look into in order to find opportunities to make some money. And I'm going to show you today's analysis that I did on the Kiwi. Small traders is retail traders, is like us, but I don't really follow that. Open interest is interesting, net commercials, and then you've got the COD index, which is Larry Williams COD index, and that will give you a generic. For instance, here, look, this is aligning with what I'm thinking. 82% long on the New Zealand dollar. That is aligned with where I'm going. However, a lot of the times what I've noticed is this can't be used as a signal, because a lot of the times it's a bit delayed, or it takes too long to get into play. Another thing I also like to look is a seasonality. And seasonality, I would definitely recommend looking at the More website. It is the gold standard of seasonal analysis, in my opinion. Yes, you have other new software that are doing it, but this is the most detailed, and it has been for years. one of the best ways to analyze seasonality is the more research website. So what I did in the beginning of the year, I bought their market analysis for 2024, and we can have a quick look on that. So when you purchase the report, it will look something like this. This is the country chart that I got, and it will give you details of how you can use the report and what it's telling you. Here we see the dollar index. We've got a 39-year seasonal from 1985 all the way to 2023. And you can see how clear the downtrend is in April all the way down to the end of April, and then we've got a big rise all the way to the top here in end of May. So that is something that we need to take into account if we're going to be holding trades within this period of time. And also the dollar index is impacted on all major pairs, so that is something that we need to look for. Weakness by the end of April, strength after, as we're going into May, towards the end of May. With the COT report, as I showed you, it's a very dull process, and you can't really understand. Our brains are not wired in a way to understand numbers. We need to visualize what is happening. So I couldn't find anything online that would give me enough information that I could make meaningful decisions on. So I had to make it by myself. So I created a dashboard on Tableau to feed in the COT information. If you're interested in on how to make these dashboards, make sure you write in the comments, and I'll try my best to explain to you how to install a Python ecosystem where you can just write some code with the help of ChatGPT to create a dashboard like this. It's super useful because then it's free and you can just refresh it every week, every Friday, and then you have your new data to make your analysis. Here, just to give you a little bit of a glimpse on what happens in the background, you can write some code and that will feed an Excel sheet. So you're directly getting the information on to an Excel sheet, which you're then feeding into the data source of Tableau, and Tableau will give you this information, and then you can just go onto your tab, refresh it, and that will give you the latest data. Now, the way I've used it, and you can see here, we've got non-commercials and so on. I'm not going to go into detail of this because it's going to be very confusing for people, but I wanted something simpler that I can use on TradingView. So then I had the idea to make an indicator of this on TradingView, and it worked really well. So here we are. On the top here, you'll see the conscious day trader speculator longs. And the two white lines is giving me a standard deviation so I can use the data. Now, this is directly from the COT report, and that is pretty cool to have on your sheet. And you'll see why is because, for instance, here we can see directly how the COT report is affecting the price action. And we can see here when in the USD JPY, when the dollar index was heavily short, we start seeing a long opportunity, because remember, the speculators are normally trying to leverage, the heavy leverage, and when the lever is then heavy positioned on one side, that is normally an indication of a reversal. And we can see that happening here. Look at this. We've got our levels in there, we've got everything, but for now, let's focus, we're on the weekly. We want to see, in the history of the New Zealand dollar, has there been another time where the speculator short positions have been that high at 56,212? And you can go here and you'll find that this was about 56,000 positions. Very similar time to when we had a bull run with the New Zealand dollar. What about another one? What about this time here? That is another area as well where we're around 56,000 short contracts, and then we had another bull run. What about these areas here? Another bull run. As you can see, knowing the short positions and seeing if it's outside of the norm, it gives us a very clear indication for potentially to protect us when we're trading, and we want to be on the right side of these areas. What I've noticed from this sort of analysis is that the speculator shorts are the best predictors in terms of looking at a reversal. And here we can see that we're historically high here on short positions on the New Zealand dollar futures. So that is telling me that at some point, these leveraged funds are going to need to take profit. And that's what we're seeing here. And now I am anticipating that the New Zealand dollar will start to push higher. And that is the area that I've decided to focus on for this week. So I'll be looking for New Zealand longs. Now, does that mean that it's going to give me New Zealand longs 100% of the time? No, nothing is 100% of the time. But with repositioning, and if you know what repositioning is, a pound average approach that I use to make to help me decrease risk with something that I call risk mitigation. All this is in a free masterclass that I've also done, and it's now in the Discord. If you do want to have that masterclass, make sure you comment below masterclass, and I'll try and reach out to you to get it, as I think it will give you more clarity on how to trade the ins and outs of these of the repositioning approach. So let's summarize this. What I'm seeing here is that this, by the way, the white line is a 1 standard deviation. We can see we're about 2.5 standard deviations away of the norm here. So that means that their leveraged shorts are very, very, very heavily shorting the New Zealand dollar. And at some point, they're going to need to take profit. When these short positions start closing, we get lower and lower. We're anticipating a push higher, which will show that they're getting out of their short positions. And that should be coming very soon. Now, if it doesn't come and it breaks down lower, that just means that it gives us a little bit more safety in terms of being able to reposition, because we know that at some point, these speculators are going to need to get out of these positions. I hope that makes sense. Now, to finalize this video, which I know it has been quite a heavy video in terms of a lot of new information, I just want to show you the current situation on the New Zealand, and we're going to go on to the actually New Zealand USD. We can see we're holding below a level. Now, I am currently trading on my laptop to my left with a position long. I am currently sitting in $118 profit. However, I do have still positions to close. I longed at this area here because I thought we're going to be breaking this level higher. So if you know my repositioning, this would be my first entry. Now that went into drawdown. So after 10 pips, I added 2 more positions, 4 pips on this arena. This is a 75,000 account, so I'm trading on a 0.5 lot on these. So what happened with this situation, price went down all the way down here and then came back up, which gave me an opportunity to close this position for profit. So I took this position out, and then I took this position out, both of them for 10 pips. So now that has given me a profit of $118. But the current situation is that we are now sitting on top of this position and waiting for this position to close. Now I could close the whole entire position for a profit of $50, $40, but I look for around $50 on this account. It's a smaller account to make on this move. Now, if this continues higher, I will be making my $118 plus another $50, $250, and so on. And if I see a break above, then I'll be holding it for a lot more. But I just want to give you an indication that it doesn't mean that because we have done all the analysis and everything looking like the New Zealand dollar is potentially going higher, it doesn't mean that it can't prolong the pain going downwards, right? So we have to be aware that this is not always going to be, oh, everything is looking long, the COT report is looking long, so that way I'm going to be longing this. It could push for another low, push below, take out liquidity, and then go higher. We don't know when. It's not a timing thing. We don't know when it's going to happen, but what we do know is that the leverage positions are heavily short. And like here, they are taking profit out of these short positions. Now, this short position is quite a big one, so we're anticipating at least a move to the upside, and that could look like a 50% push to the upside. Look at this, the 23.6 is exactly where that level is holding. So we want to see a break there. A safer bet to trade this will be a break on the 23 and doing a normal Fibonacci retracement all the way to that gold zone of the 0.5 to 0.618. I hope that has been useful, and make sure you subscribe to the channel, as I'm going to be doing more of these. And if you want to know more about the COD report, obviously there's multiple videos out there, but please put in the comment and I'll do my best to try and support you on this crazy area is in understanding the markets, especially with what's going on now in the world of currencies and stocks and more. Have a good one. Until next time, see you soon.
I can't take no loss. I don't even know what it costs.